Yes, sir. It's your boy B Hayes back with another one, guys. If you can't take the pain, you don't deserve the gain. So AMC, we ended Friday at $20.39, broke through that strong support area at $19.90, hit a low of $19.51, guys, giving us a gap fill indication that we can easily come down to that $14-15 level, guys. Either or, huge demand is coming in at the $19-20 level. If they too scared to even drop it down to the $14-15 level, demand is coming in at either level, guys. Strong demand is ready to be eaten up at the $19-20 range and also the $14-15 range, guys. So either or, I believe we is still in a win-win situation with AMC. For the past 6 months, AMC, counting January, AMC has been in a loss, losing every single month. We have been declining, but the 6 months prior to that, we have been winning. So basically half and half. This thing has been a real live tug of war, showing us to have 50% of the strength and showing them to have 50% of the strength, guys. And I do believe the next upcoming month, going towards the end of this month, going into February, I do believe AMC will see a huge swing to the upside. I'm talking a $20-25 a day, guys. 1 to 2 days, AMC recovering $20-25. That's what I do see happening, guys. So you already know, like I told you guys in the previous videos, if you done came this far, selling shouldn't even be on the tip of your tongue or the tip of your mind, because if you done held it and came this far, guys, you might as well thug it out all the way to the end. Data also shows shorts haven't covered yet, guys. They still have those borrowed shares out on the markets that they haven't bought back, guys, and they still have to buy those shares back. So we still waiting on short interest data to pinpoint and show us that shorts are beginning to cover. So we still is waiting on that. So it would be very naive to go ahead and sell out now. If you done been in this thing for a whole year, guys, you might as well ride it on out. So let's go ahead and touch bases on Tilray and Sundial as well, guys. Just a quick update. I know a lot of people is in those as well and probably wondering what's going on. It's pulling back. Know that the stock market as a whole, guys, is in a sketchy situation right now. I'm going to do a separate video on that and explaining what's wrong with the stock market and why I believe the stock market is being very weird lately, depending on for the past 300 days, usually since the past year, the stock market has been in a weird state, guys, and we're going to explain that. But let's go ahead and take a look at Tilray and Sundial Growers. Tilray, that's a heavy hitter for us, and Sundial is a sympathy play. If Tilray does well, Sundial would do well as well. Tilray has came down to that $6 range. It came down to the mid-6s on Friday, and we seen going towards after hours, towards the end of the day, we seen that nice cup and handle shooting right back, almost hitting 7 at $6.95. And Sundial, as Tilray been steady declining, Sundial's kind of have bottomed out. If you notice, it's kind of been lingering around the mid-50s, because 55, 56 is the bottom, I believe. If it falls below that, it's going to go lower than it did even last year, which I don't believe is really going to do. It could possibly come down to 47, 48 and try and shake that tree a little more, because people wouldn't be expecting it to do so. And we know the stock market is in a weird place right now. So let's go ahead and take a look at this though. Tilray and Sundial, I most definitely will be holding those long term, guys, because we know Tilray announced its Q2 results on Monday, and at the end of November 2021 for the quarter, Tilray earned a profit of $6 million or 1 cent per share, which may not sound like much until you take this into perspective. To many investors, 1 cent per share might not sound too impressive. However, marijuana companies, including Tilray, have reported massive losses in recent years. As a result, generating a small technical profit is a major achievement for the company. Furthermore, analysts have been on average expecting Tilray to lose 8 cents per share, so the company's earnings per share of 1 cent was well above the mean outlook. Interestingly, Tilray actually fell short of analysts' average revenue estimates. Despite its sales miss, Tilray beat the mean outlook on the bottom line because of its strongly improving its profit margins. In its key cannabis segment, Tilray gross margin was 43%, which is quite attractive compared to its peers. Meanwhile, the company has achieved $70 million of cost savings already from its recent merger with Euphoria. The cannabis maker will surpass its original target of $80 million of savings from the merger by the end of May. So that's always good, guys, to hear, because companies usually don't even meet their savings requirement. Whenever they do a merger with a company and they want to save a specific amount, they 10 times never usually meets it. So for them to meet beat it, and then now talking about surpassing it, they savings cost, that's also a plus, guys. That's a real plus for shareholders. So Tilray now anticipates generating an additional 20 million of cost savings beyond what it originally forecast in the wake of the accusation. So that's huge news, guys, for us as well as shareholders. So I do believe Tilray will see a crazy turnaround, guys, and a lot of people will be missing out, because when Tilray moves, it moves fast, and it leaves, you know, anybody behind that ain't on the train, because Tilray can easily, you know, run up to 11 quick. Once it get to 11, we could easily get to that $14-15 range, guys, and from there it ain't nothing but upside. So from the price it's trading at now, I do believe, you know, it ain't nothing but upside that's coming soon, guys. So you already know what to do. Consider joining the family if you like these type of updates, predictions, all that good stuff. We talk stocks over here every single day, guys. I love y'all. We out, and God bless you. We gone.